Hey guys, what's going on? I'm going to do a video today on E.G. indicators or EG indicators. You can see it on the page right here. Before I get started, I just want to make sure you guys know that I have a course called Learn How to Win 90% of Your Trades in 90 Seconds. It's completely free. I've seen people sell similar information for $1,000. So definitely check this out. It's an email course. Just put in your email. And every other day it sends you just a little bit of information about how to win 90% of your trades. And it only takes 90 seconds to learn the basics. Alright, so check that out. The link will be in the description below. We're going to talk about EG indicators. So I just signed up for this, and this is my first day with it, so don't have a lot of data yet on it, but I thought I'd do a quick part 1 review, and then do another part once I've got a bit more experience with it so that I can share how it's been doing overall. But I thought there was enough data on day 1 to kind of show you what this is, tell you a bit about it, and see if it's something you guys might find useful. The first thing I like about this, and this is very unusual in this industry, is there's a huge transparency in who the people that have built this thing actually are and what their credentials are. So here are the founders. Dr. Levy, she's a computer scientist with over 20 years of research and practical experience in the high-tech industry and in academia. So her main interests are machine learning for anomaly detection, quantum computing, something I used to do, and algorithmic trading. So she definitely has credibility here, which is good. And the other guy that's working or owns this with her is Mr. Grinberg, so this guy right here. And so he's had 10 years of trading experience and AI algorithm development. So on the face of it, these guys are very qualified, and it's exciting to see such transparency in who's behind some of these products. Because a lot of these algos, you don't ever know who they actually are. They could be anybody. They could be some 21-year-old working out of his mom's basement. So it's always good to see this level of transparency about the founders of the company. And this whole thing has a nice air of professionalism about it. So it's definitely something I like. So what exactly is it? Well, there's 3 different parts. The part I'm testing at the moment is called Trigger Point, so we'll go there. And I'll leave a link in the description. You guys can go and check all this out for yourselves as well. So let's see if this actually loads. There we go. Alright, so the trigger point, or EG trigger point, is basically, and this is what attracted me to it, it's very simple. It's support and resistance lines drawn on the chart for you. One big important note here is this is just for futures trading, so you can see some of the tickers down here. ES, NQ, oil, gold, ZB, ZN, UB, SI, HG, X6B. So this is really for futures traders. So this is something I'm interested in because I trade the futures with Lance from thetatraders.com, and it's something that is definitely pretty interesting to have on your chart. So these draw support and resistance lines, which are very complex by the sounds of it. I'll get into that in a little bit. You'll see there's supposedly AI-based support and resistance levels. Anyway, if you're a day trader, because these are only specific, these support and resistance lines are only specific for the day, so they change every day. Based on what the AI and algo figures out from all the data that it's crunching. So this is really for day trading or just looking at the intraday moves. So maybe you've got a position that's getting close to expiration. If you're selling options or whatever, it would always be nice to see where the support and resistance levels are just for that final day or whatnot. So I'll talk about trading strategies in a minute, but let's just see where these come from. So one thing I want to point out here is these are for TradingView and NinjaTrader 8. So I'm going to show on TradingView, they're going to be similar on NinjaTrader. So this is their explanation of what these are, and this is where things get complex, and it sounds really impressive, right? So powered by an AI engine on our cloud server, delivers significant price levels, support and resistance daily, 10 hours before the market opens, so you're ready to go for the market open. So our AI's prowess in identifying these key levels is honed by analyzing market data that's not readily available on most trading platforms. So this is what they're saying, the proprietary edge is, that this data is not readily available on most trading platforms. This is not drawing lines from peaks on the, on ES, for example, and saying that's a resistance, and then putting a line under dips and saying that's support. It's much more sophisticated than this, according to these guys. So this precision-driven approach, a fusion of technical analysis and machine learning techniques, enables the algorithm to pinpoint areas of interest with single-tick accuracy. Now, that's debatable, and I'm going to tell you why in a few minutes. The algorithm aims to identify those key levels by analyzing past market participants' collective behavior reflected in historical correlated and deep market data. This all sounds great, right? But what does this mean? Like, I have no idea. And they don't really tell you. They just keep using these sophisticated sounding buzzwords. In particular, our levels are specific price points on a chart, and I'm going to show you these levels on my charts in a minute on gold and ES and oil. And so the specific price points on a chart expected to track the maximum amount of buying or selling, i.e. significant price levels in contrast to random ones. That's good to know. Our support price is at a price which one can expect more buyers and sellers. Likewise, our resistance price is a price which can expect more sellers and buyers. So I guarantee you most people watching this are going to know what support and resistance is, so this is kind of pointless. So let me show you, or talk a little bit about what you can do with this. So they're saying that the single tick accuracy, the EG trigger point algorithm, could benefit various trading strategies. Here are a few potential applications. And so they list scalping, reversal trading, breakout and trend trading, stop loss optimization. So we'll talk about that on the actual chart in a minute. So this all sounds fantastic, but does it work in practice? Because these guys obviously have the credentials. Obviously, like, they show some nice plots here. So this is what I'll show you on my charts in a minute. You have green for the support lines, red for the resistance lines. And their tutorials basically say the first time during the day that a line is touched, it's most likely to reject or bounce. So if it rises up and touches for the first time on this resistance line, you'd expect a rejection. And that's what you see in their example on their webpage on the E-mini futures. And again, the first time it touches on the support line here, you'd expect a bounce, and that's what you can see happen. So you can imagine strategies here where you buy puts, or you buy puts here, or you buy calls here on the bounce. So pretty simple, and that's what attracted me to this. Is it's very simple, and there's lots of different ways of getting support and resistance lines, and this one sounds like it's the most sophisticated, right? In terms of pricing, you can actually get a 2-week trial for $29.90. So you use a code, and I'll leave a link in the description below for you to get that. Otherwise, it costs you $128 per month. So this is not the cheapest thing ever, but it does work to some degree. So let's go over to the charts now and talk about what I'm seeing. So this is day 1 for me. This is on the left here. This is where the 4th of October, which is today, started. And you can see that we have our green support lines here that the algorithm's put on here, and a couple of red resistance lines up the top here as well. So zooming in a little bit here, this is 1:45 in the morning. So if you start to trade, say, even at 6:30, we could consider this the first tap of the line. It doesn't quite make it though, so technically not really. But you can see that as it gets up to this resistance line, it has sold off pretty nicely. Maybe this is the first time that we test the support line for the day. And again, this has worked really nicely. This is gold on the 15-minute chart. We've got a nice bounce off of that support line. Really nice there. However, there is a strong wick that goes right down almost to the next support line right down here. So when they say single tick accuracy, this line didn't act as, that accurately. It's not like this bounced exactly off it. You can see a couple of the candles before and after did actually hit it very close. But there was one candle here where it really did break it. It got sucked back up pretty quick, but it did break it. So we're not getting them like absolute perfect, and then, of course that's too much to ask, right? So you can see that as it came up from there, it did the same thing, but a little bit more worryingly here, where we did see a rejection from this line, from the resistance line here, which is nice, except again, it's not single tick accuracy. We went halfway into this area here, and the whole point of these lines is supposed to be that they're really solid, not zones. But really what we're finding, at least what I'm seeing, is that there's zones here, and really the zones are between the first 2 support lines and the first 2 resistance lines. If you were to just trade like very tight on these levels, you'd probably be stopped out pretty quickly. So if you went and bought calls as we hit this line here, there's a good chance you'd get stopped out as it broke this line right here. Now that's where the really trade management comes in, right? You have to be able to figure out where you're going to put your stop loss. And there's some guidance on that if you buy the annual plan, but there's no guidance really if you don't. So you have to come up with your own trading plan. Maybe you want the next support line to be your stop with a target of twice that, for example. So you'd be taking profits up here, stopping out down here. So you have to figure out what you want to do and how you want to play these lines, which is typical for all the style of trading, with support and resistance and these levels. So levels trading is nothing new. This is just a new way of putting levels on. So you'd hope that these would be really accurate. And they look actually pretty reasonable on gold, right? We have this move here, this move here. We haven't tested it again, but really those are two fairly nice moves. I mean, it only penetrated halfway into the what I'm calling the zone. They don't like that idea because they don't want these blurry zones. They want very structured key levels that are really where buyers and sellers are stepping in. But you can see that's not really the case even in gold. And here's the thing, gold is actually the best example. That's why I'm showing you it first, because now I want to show you ES on here and in oil as well. And neither of them worked out particularly well. So if we go to here, not sure why this is so crazy. I guess I click here, there we go, it's better. Okay, so we'll put this on the same scale I had for the 4th, which is today. So you can see when the 4th started here, we're right in the middle of the lines. But look what happens on the first attempt here. This is again 15-minute, but this is on the S&P 500 E-mini futures, so ES. And you can see that the resistance line here just got completely smoked. This just went up straight through both of them. Would have stopped you out, hopefully, depending on what your stop loss was, because this would really not be significant at all. Like, this was just a breakout. So if you were looking to do a reversal scalp play and hopefully, hope that this thing would kind of come up and then bounce down, then you would have definitely had a hard time, making money on that part. Sure, it reversed, but away up here, came all the way back down underneath this resistance line. And it did kind of respect it a little bit, but this really isn't how you'd be trading. This would be pretty difficult, especially, like, would you really have the confidence to jump back in here after seeing what happened on this one? So far on ES, like, this obviously is only one chart and it's the first day that I'm looking at this. But to me, these don't seem particularly solid, because you can see again, the lines weren't really respected here either. I mean, they were in some way. This would come in the new support line, but I don't know. This just seems very rough to me. So on ES, I'm not impressed with the EG indicator, trigger point indicators at all. They really don't seem like they offer more advantages than other ways of drawing support and resistance. So here's another one, oil. I've got a position in oil at the moment, so it's particularly something that I care about. And you can see that again, this is the 4th that start here, and we just ripped up and just completely ignored all these lines. Then we came back down, retraced, and then just ignored the rest of the lines. And now maybe we're rejecting from resistance level 3, but who knows, because you could have probably thought that here as well. Looks like it is. So that's the resistance lines. Of course, we never came anywhere near support, as oil's really bullish at the moment, which is nice because not all positions are doing well. So that's oil, ES, and gold. And so at the moment, on my first impressions of EG indicators, is the pros are I like the people that are involved. They have academic backgrounds. They seem to be very credible. The cons here are really the trigger point resistance and support lines don't actually seem to be that accurate. So you can see on ES and CL really didn't respect them at all. And then on gold it did to some degree, but even on gold, which was the best one that I could actually find because I wanted to show you it actually worked, and even on gold it's overshooting significantly. So this talk about single tick accuracy and no zones, you'd still have to trade this with some zone-like behavior, right? You'd still have to have a stop loss somewhere, and not just have it X. You'd have to have some sort of trade management here that would allow for these wicks or even candle closing outside of your zones. A couple of ways to trade this is you could do spreads, right? You could do 0 DTE spreads. Maybe you have strike prices at the 3rd or the 2nd resistance and support lines, so you'd give some leeway for these spikes. But overall, you'd hope that they would stay within these two boundaries. I know some people that do that with other key level type of structures. Could be something worth thinking about if you like to trade spreads. So this could be fun for for futures traders if you like to do that kind of trading. But I'd say, like, so far in day one, these lines look like they're sort of respected, but a lot of times they're not. So the accuracy may not be that high. But as time goes on, I'll keep you guys updated because I'm going to try this out for a good 2 weeks, and I'll try and report what I see. And if these lines are generally better respected on other days, this might just be an off day. Anyway, hopefully that's helpful. I'll leave a link in the description where you can find EG indicators, and I'll talk to you guys soon.